I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. Real interesting times since we last spoke. Stock market's hanging in there, and of course, gold is inching up. We went through 1,300, and now we're testing 1,350.
What do you think is the resistance point for gold, and if it goes past that point, will it go to another?
Well, it's really an interesting moment right now because since October, gold and the mining stocks have been among the best things to buy, period. You know, the gold stock sector is the top performing sector in the whole stock market. The gold stocks are up since Labor Day, while most of the technology stocks are down, even with the recent stock market rally. However, in gold rallies that last for months, typically the big companies such as the Newmonts, the Barricks, they go up first, and a lot of the small caps, the juniors, the exploration companies, they don't really participate at first, and you really need to see gold break a psychological level for them to start to go up. In 2016, this happened when gold basically went through 1,350. There are many small cap mining stocks that doubled within 6 weeks, and I think we're now starting to inch towards that moment, and I'm actually seeing lots of small cap mining stocks that are breaking out and starting to go up, even though gold's not through 1,350 yet. They're not all doing it, but some of them are definitely doing it. So I think really, you know, it looks like 1,350 is we're pausing there at the moment. And just like 1,300, I expect we're going to hear people say, oh, we're going to pull back and all this is going to happen, and it probably won't. We'll probably just go through this level too. And I think it's at that moment that we're going to see more of the small caps really start to go up. But to me, this looks like a rally that's probably going to just last all year with just pauses and not any real significant pullback. But I think it will be the next move that will really start to get people excited. And it is such an important psychological level because really this 1,350 to 1,370 zone has been the resistance level since 2013. It's defined every single top. So if we go through that, all the people looking for a pullback before they buy will give up on that idea, and people are just going to start to pile in. So I think we're going to see that moment happen sometime. You know, I can't predict, ahead of time, is it going to be next week or next month or whatever, but I do think it's going to happen, and I'm just content to hold the positions I got and look for new buys ahead of that, and I think that's what we all need to do. If you're, someone just watching this and looking for the pullback, or whatever, I would just suggest get a list of stocks that you really want to own, do your research into that, and, set up a plan. If it pulls back to this level, buy. If it doesn't, and consolidates and breaks out, buy then. But the key is to know what you want to buy ahead of time and do your homework now. And I think this is really going to become the exciting story of the year, much like the marijuana stocks have been over the past 6 months or so.
If gold starts to make a swift move, will silver pop even higher?
Well, yeah, and we're actually seeing that to a certain extent. Some of the silver mining stocks are among the best performers, such as Silver Wheaton, Pan America. It took a little hit on earnings, but it's come back. It's now Wheaton Precious Metals, WPM, not Silver Wheaton. They changed their name, but that's become one of the top performing mining stocks, and silver does tend to go up at a faster rate than gold, especially when you get to that moment where people start saying, oh, this is a real bull run and not just a temporary one. And it's going to take that move of gold to 1350, 1370, that zone, to make that happen. And then people will start to flock into silver even more than they're doing already. But as far as trying to predict that 1350 move, I'll leave with one suggestion on that. And gold tends to trade opposite to the U.S. dollar. And the U.S. dollar index, it had a tremendous rally last year in June, when Trump really started the trade war with China. It's when he first started slapping all these tariffs on China. And gold took a temporary tumble in August. And of course now it's been going up ever since then. But the key is the U.S. dollar index. That rally appears to have ended several months ago. And it looks like the U.S. dollar index is forming a top that would likely be completed by the end of March. So that's one reason I'm not really expecting a big gold pullback, because the U.S. dollar index just looks like it's topping out. And I think if it completes that top and rolls over by the end of March, I think gold is just going to really, really start to take off and go through those levels. And we got two events that could trigger that. We have, for the U.S. dollar, we have another Federal Reserve meeting sometime, I think it's March 19th. And also, at some point in March, there's a very good chance that Trump is going to meet with the premier of China, and they'll claim they've got some sort of trade deal of some sort. Who knows if there's going to be actual substance to it. It could just be a show, but everyone is kind of waiting for that event, and that could be something that moves the markets too, and causes the dollar to fade, because the dollar really began the big rally when the trade war started, and it may completely tip over when the trade war has a final truce or ending or something, whatever is going to happen. And that could happen next month or April.
We'll have more with Mike Swanson right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, U.S. automakers are pleading with President Trump not to put tariffs on European cars. Why would they do that?
Well, they know it would be, they want to maintain their exports to Europe, and it hurts them. I mean, that's the crazy thing about the tariffs, is it hurts a lot of American businesses. Of course, the soybean farmers have gotten wiped out. Many of them are going bankrupt. And American car manufacturers need these overseas markets. Now, with that story, it's sort of like a threat that Trump has, and there's not any real, I don't think, evidence that he's going to deploy that threat. So, but I don't think he wants to take it away either. So I kind of think of that as a non-story. And I'm going by, when I say that, what I'm reading in the Wall Street Journal. You know, there's articles about this stuff, and as far as I can tell, that's the best source of news on these topics, the trade topics in the Trump administration is the Wall Street Journal. Or if you go to some of the European newspapers, and then there's the South China Post. If you want to read about China, they actually put details about their trade negotiations and that's linked to the Chinese government, of course. So that's where we're at. We'll find out what's happening.
Going back to precious metals, how is palladium doing right now?
Oh, it's lagging gold and silver, but it looks good. It's like copper. Copper looks good too. All the metals, we're typically in a precious metals cycle. Gold goes up, silver goes first, and then palladium and these other metals follow. They don't all necessarily trade in sync every single day, but there is that pattern to it. So most of these metals have good bases, such as palladium and copper too. And I mentioned copper also because the big copper mining companies like Rio Tinto, they're trading up with the gold stocks. And I wish I owned Rio Tinto. It pays a nice dividend, but all these mining stocks are starting to sort of trade up together. The big ones, uranium's lagging, Cameco's lagging, but the uranium sector is a lot smaller, and it can be so company specific related to what Cameco's doing.
We'll have more with Mike Swanson right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, how is oil doing, and where do you think it's going?
Well, that's the big question, is the other commodities. When you get outside the metals market, all the other commodities, the soft commodities and oil and energy are acting very soft, very sluggish. Oil, of course, fell last year when the stock market fell. The oil stocks really dumped, and then they bounced back up as the stock markets bounced back up. And agriculture and the soft commodities are still languishing and lagging and haven't even really rallied. So I'm a little bit, more cautious or maybe even pessimistic about these other commodities for two reasons. One, in a new commodity bull cycle, it is gold and silver and the metals go first, and then these other commodities later. And oil actually tends to start a bull market at least a year after gold and silver do. So that doesn't mean oil is going to crash, but I think it's going to be a while before it has the type of run that we seem to be seeing begin in gold and silver and the other metals. And then the other reason is that the global economy appears to be weakening. A year ago, well, in June of last year, we saw the global yield curve invert. That typically signals a global recession in about 12 months. And we're seeing some soft economic data. The leading economic indicators in the United States actually went negative recently. And interestingly enough, and more related to oil and the other commodities, is the Baltic Dry Index, which is the rate shipping companies charge to transport goods across the world. That jumped last year and made New Year lows in January and hasn't even recovered. And that's signaling a recession. And all that would be a sign that the commodities are going to remain at depressed levels, with agriculture and oil, agriculture depressed levels, possibly oil, too, but we'll see. It's, on the other hand, I think, as I say that it's also a great investment opportunity in those sectors too, because we're talking about lows, that will probably be in place for the rest of our lifetime. And when it comes to agriculture commodities, lows that are pretty much historic since the 1970s. I mean, the lowest price for agriculture commodities compared to the U.S. dollar since the 1970s, since before that rally then. So I think there's great opportunities to invest, but you gotta, be willing to hold your nose and wait. But I'm waiting even more when it comes to energy and energy stocks. I do think before the year's over, we'll see the U.S. stock market go back down and probably suck them down with them, and for a double bottom or some sort of great buying opportunity in energy stocks at the end of the year or early next year or something.
How is the marijuana sector doing right now?
Well, it's interesting because the marijuana stocks are doing great. Of course, they bounced back up. They took a big hit last fall with the stock market, but they have been, along with the gold stocks and actually some defensive sectors like REITs, utilities, and so forth. But the marijuana stocks have been among the top performing sectors on this rally. Some of them have made new 52-week highs. Others now appear to be pausing, such as Canopy Growth. The big leaders, they're basically pausing below their 52-week highs last year. In a pattern, they're trading in a tight range. You've been doing that for about 3 weeks. On the charts, looks like that might continue a week or two, and that would lead to probably another breakout, another run in that marijuana sector. I don't know what they'll do after that, but I do think good chance we're going to see them have another run in March. So if people want to play that sector, it's probably a good time to buy now. Personally, I think that's a fun sector for people, but long term, I'm just more of a believer in the mining stocks, gold and silver. I don't think they're just going to go up for a month or a couple of weeks, but for a couple of years. So that's what I'm more interested in myself. But the marijuana sector has definitely caught on with the general public. I've got an account with Robinhood, and they show you the top 100 stocks owned by the most number of people, ranks them. And number one right now is ABC, is Aurora Cannabis. And Apple was number one for all year up until recently. Now Apple's number 3, and there's marijuana stocks. They're making up at least 20% of the list. So marijuana has caught on, is the big thing to trade. It's capturing the attention of that's called the day trading public, the momentum traders. Marijuana is what they're focused on, and I think they can get indeed another breakout rally, and I don't know what will happen after that.
Mike, thank you so much for chatting with us.
Great talking with you. Have a good day.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.